Hi everyone who are joining the call now. Good to see you. We are starting with name changes as usual, so please make sure that you have your name and your company name on your Zoom name so that we can identify you and allocate you into breakout rooms later today. Thank you. Good morning, everyone. I see that we are getting more people on the call. Please start by changing your name so that we know who you are and can allocate you into breakout rooms. All right, maybe let's start today's meeting. One more reminder for the new joiners to please change your name so that it includes your name and your company and we can identify you. Thank you. So welcome to our third workshop. Last time you did a greenhouse gas practical exercise. I am very sorry that I missed that session, but I hear that you had a very engaging and active meeting. But now we have moved on to module 2 of the program and we are focusing on science-based targets. And today we are discussing near-term targets especially. This is the team. You've met most of us by now. You will hear from me and Albert today. And then we have a new colleague in the team from Iceland. Fritzem will be supporting the Icelandic participants from now on. And just a reminder of where we are in the program. So like I said, we have entered module 2. We are focusing on science-based targets. And this is the first workshop of this module. We are expecting that you have been in the academy and doing these on-demand sessions there, or otherwise you have this information or the knowledge of SBTs and the near-term targets, because that's what we are talking about today. And then Albert, at the end of today's session, will tell you more about these next steps and what is coming up next. If you ever get lost or confused and you don't know where you should be and when and what you should be doing, please note that this schedule is always on the Q&A document. So you can always go there and see what the schedule is. And we also have the next steps always written on the Academy platform. So please take a look at those or contact your country contact point. We are, of course, very happy to always help you out. This is the agenda we have today, very similar to previous workshops. Very soon you will hear from Lea Fink from 21 Holistic. She will go over the near-term SBT topic, and we have reserved plenty of time for questions and answers. You can use the chat to post questions, or you can use the raise hand function here on Zoom, and then we will allow you to open your microphone and speak. After a short break, we move on to breakout rooms. The groups are the same as before, so you will meet your friends there and you can continue the discussions that you've had in previous meetings. And then finally, we go over some next steps. Here are our housekeeping rules that you should know by now. Please mute your microphone when not speaking. Keep your cameras on as much as possible. Please make sure that you have only one spokesperson for your company, and please respect the Chatham House rule. As you know, you are very free to use the information that you receive today, but you shouldn't reveal the identity of the speakers. And just a note about the recording. As usual, we are recording this first part of the meeting, but of course, we are not recording the breakout room discussions. And then we saw that there was an AI note taker joining the call. Unfortunately, we will remove these AI note takers from these meetings because of this Chatham House rule. So that is good for you to note. But then just one more reminder to please change your name so that we can identify you. Please make sure that we see your name and your company name here on Zoom so that we can allocate you into breakout rooms. And then it's time to hand it over to Leah and start our presentation for today.
Thank you so much. And hi, everyone. Good morning from Berlin. My name's Leah, and I'm very happy to be with you today. Let me just share my screen real quick, which you should see now.
Yep.
Yeah. Great. It doesn't show me that it shows, but if you tell me that it does show the presentation, wonderful. Great. So I quickly introduce myself and what we have planned for the next 80, 90 minutes that I'm with you in this session. I am here today on behalf of 21 Holistic, which is a consultancy made up basically of ex-SBTI staff that are still actively working in this field with organizations and corporations. And I myself was working in the SBTI in the corporate engagement team for 4 years, first as the European regional lead, also working with a lot of companies in the Nordic region along their science-based target setting journey. And then I took on the role of the global strategy to engage high impact companies especially, so also designing campaigns and so on for heavy industry specifically. Wonderful. So what are we going to do today? I hope that all of you completed the online learning modules. But even if you didn't, we have a lot of time today, and the most important thing is that this will be useful for you. So please make sure to contribute with your questions, or even if you feel there's a topic that hasn't been covered that you would like me to elaborate on a little bit, right? It doesn't always have to be specific questions. I'm very open to that. I would welcome a very interactive session, as said, because it enables me to tailor this to the group of participants and how you're in this call today. So as the online learning module is the content is not from this year and still generally valid, of course, in terms of the principles of target setting and so on. However, there are changes that are not part of these modules. So the first thing I want to do is to really make sure that you are aware of those, you're able to find the most important resources, etc. Then I want to spend quite a bit of time to go through the numerous questions that you shared with us in advance, which is great. Thank you so much for everyone that sent questions. And lastly, make sure to leave some time for live Q&A. Which is a good reminder to encourage you to use the chat function also from now on, basically, to write down your questions, because it will enable me, even also if I go through the pre-sent questions, to kind of weave in answers if they are related to the topics that other participants already asked questions about. So that is really useful. All right. And then in the Q&A, of course, you can also raise your hand, etc. So let's get started. Where are we now? The SBTI has now existed for almost 10 years. conversation started around like a little bit longer than 10 years ago, the concept, and the mission is still the same, right? The SBTI wants to provide companies with the frameworks for climate targets aligned with science. And while that is still the same as the mission itself and the activities that that can be derived from that mission, the standards that the SBTI is providing the public with have really changed and become much more granular. And this is a good thing, right? This is on one side because science is becoming more and more clear, and it's also, for instance, when we had 2018, right, the initiative had already existed. The IPCC released a special report on 1.5, and then the SBTI raised the bar to 1.5, right? So that's a great example of how the SBTI is making sure to keep aligned with the most recent state of science. And the most recent state of science, our collective learning changes, right? So that's one reason. But the other reason is that the SBTI wants to increasingly and more granularly cater for different groups of corporates to make it as useful, to make these frameworks as useful as possible. And of course, to also provide net zero and long-term target setting options, because that is just something that we really know that companies have also been doing and claiming way before the SBTI has published a net zero standard, right? So before 2021, when we were talking about SBTs, we always talked about near-term targets, right? Nowadays, we call them near-term science-based targets. They run for 5 to 10 years, right? And then we have long-term science-based targets, which are net zero targets. In most cases, those are synonymous. Then we have the FI standard and the streamlined route for small and medium-sized enterprises also since a few years. As part of that exercise to refine those standards, the initiative is every year updating its resources. So this is what I would like to start with, because it's really important to be aware where to start, because it can definitely be overwhelming in the beginning. So also the website has changed. You find the resources now structured and categorized in standards and target services resources. And what you need to start with are resources out of both categories. And these slides should be really helpful. You'll of course receive them in advance. Everything is linked. And yeah, hopefully they should be really helpful for you wherever you are on your journey. So the first thing to note here, there has been quite major changes to the content of the, not the actual standard. By standard, we always talk about the technical foundation, technical criteria, but the way the content is distributed across the most important resources that the SBTI is offering, right? So if you have saved resources last year as offline versions on your computer, delete them, go on the website, only use new versions, because some of them have, like a lot of them have been updated and have now completely new names. So I want to run you through the most important new ones that have not existed before this year. So they were, of course, also not part of your online learning course. So one thing that's really important to know, in case you've already started or in case you already had looked at the corporate target submission form, which is something that I always recommend. Like, look at the submission form relatively early on in the process, because this is what you're working towards, right? It's really important to have seen it. You don't always have to have it next to you, even though that's also helpful, I think, but you need to have seen it. This submission form has changed a lot. The last one was a Word document. This is an Excel, but most importantly, the data that you now need to submit is much more granular. That can also be a little bit overwhelming in the beginning, but it's actually a good thing, because by that it makes it makes target setting more standardized. What the SBTI is calling this is kind of front loading, which means the companies have more effort in submitting targets, right? In documenting data, but that also means that less of this back and forth needs to happen during the validation process. And this makes it much more standardized and less depending on singular reviewers and singular companies to figure out how to find a solution. That might still be necessary, right? And I'm sure some examples for that will come up throughout this presentation. So not because there's subjectivity, but because there's company-specific cases. And the SBTI, of course, has a lot of guidance on how to look at those cases, but is trying to break it down as much as possible what is actually assessed in order to check if a criteria is fulfilled or not. And this brings me to the criteria assessment indicator document, which is great because in there you have the criteria of the SBTI, and then for each criteria you have a set of bullets which are the indicators that the validators will check for, plus a column for documentation. And that's really useful to also in the beginning, having looked at ones. You don't need to study it in detail maybe in the beginning, but to have really clear what documentation you're working towards, right? So you know you have a feeling for the submission form, for the data granularity that this is demanding, plus additional documentation such as a visualization of your subsidiary structure or something like this. You know, this is an example for additional documentation. Then you have the procedure for validation of SBTI targets. That is a really transparent overview and detailed overview of the process itself, also really useful. And lastly, the SBTI glossary, new and super useful. It's a document just really explaining the definitions and of all the most important terms, right? Credits, removals, beyond value chain mitigation, everything. And yeah, it's really useful. Also, if you want to communicate complex concepts to your colleagues that might be outside of the sustainability departments and so on, you can really, you can use a lot of this already nicely summarized content. Then, as said, part of the SBTI's main projects are always around developing and refining sector standards, sector guidance, which is not the same thing, and is constantly publishing new elements. It's now also following a very standardized procedure to develop new sector standards with to call in the expert advisory group, right, from sector experts, the creation of draft methods, the pilot testing, and so on. So if you are in one of those sectors that are being developed right now, always the encouragement to get engaged in those groups if you have the capacity. It's a great learning opportunity. And of course, you can also, contribute and contribute with your own corporate perspective, right? To make the standard better and more suitable for the sector and bring in your perspective. So this year, the SBTI is prioritizing oil and gas, which does not mean that it will be finalized this year, right? But yeah, they will keep on working on it. Then develop the development of a power sector standard, a land transport standard, chemicals, insurance, and apparel. The latest publication was a building standard. If you have buildings related emissions that you think are higher than 20%, or you are in a building sector, construction and so on, yeah, definitely check that out. That just was published, I don't know, maybe 4 weeks ago. And this is just a quick recap on what we're talking about when we're talking about SBTI Net Zero. I know in this track you have an optional session on Net Zero coming up, but it's just good to keep in mind those basic concepts maybe before we dive into the granular questions, and for that to look at what we call often the SBTI net zero architecture, because it's a good way to mentally structure the different elements. So I quickly run you through this, even though you most likely have seen this graph before. The first element here, and that's always the minimum still, right? The core of setting SBTs is the near-term science-based targets running over 5 to 10 years, aligned with 1.5-degree pathways, right? Highly recommended, however optional, is to set in addition a long-term science-based target. What does that mean to set a net zero target? It means to decarbonize as much as possible and then to take responsibility for the remaining emissions, which is completely aligned with what we have to do as a world as a whole, because really achieving net zero is achieving this balance between anthropogenic emissions and the capacity of the planet to absorb those emissions, right? And while we know we need to increase the capacity of the planet to absorb those emissions through afforestation, for instance, we know that we cannot get around decarbonizing as much as possible at the same time, right? And this is really reflected in this corporate standard too. It's very much aligned with the IPCC scenarios. So that means for most companies, reducing 90% scope 1, 2, and 3 emissions by 2050 at the latest, and then neutralizing the remaining 10%. And that is, there might be phase in, there should be a phase in of carbon removals to neutralize, but this basically comes towards the end of this journey. And while it's only possible to neutralize emissions at the end and then claim net zero, it is recommended to already invest in beyond value chain mitigation, which is this optional under the axis, to already take responsibility for your emissions now, not as a classic sense of offsetting compensation, but to contribute to the systemic transformation of society, right? Through classic credits, carbon removal projects, innovation, funding, all sorts of opportunities to contribute, right? But we're now really aiming for a contribution logic rather than compensation. And related to that, which is something I do not plan to talk about in detail today, except you ask a specific question around it, but it's good to know that now there is detailed guidance on beyond value chain mitigation, which is what I was just talking about, right? The voluntary contribution in addition to your science-based target, outside of your value chain and outside of your inventory. It's really important to always have that clear. This I don't want to spend much time on. It's just, it's again, recap, criteria between near and long-term SBTs are different. And the only point I want to make here is that, and this is because this is something that I will speak quite a lot about because you asked a lot of questions about it, scope 3, right? And this is the point that I want to make here. There is today, by today I mean for near-term target setting, there is still a lot of flexibility around scope 3 because scope 3 is really challenging and it remains to be really challenging for small companies, for big companies, for basically most of the sectors and most of the regions in the world. That's the reality. And we need to overcome these challenges, yes, but at the moment they're there. And we want companies to start anyway, right? With what they have, with starting to collect data and then improve data over time, starting to set targets and understand better and better how to actually achieve them. So what do I mean when I speak about flexibility? The two important elements here are ambition. So for scope 3, it's still allowed to go for well below 2 degrees alignment, and the boundary. This is something we will talk about in a bit, that if you have to set scope 3 targets, if it's significant for you, you need to cover 67% as a minimum for Scope 3, where you do need to cover 95% for Scope 1 and 2. And on the long run, this increases though 67% to 90%. But then that's for most companies beyond 2030, when we hope that a lot of traceability issues are collectively resolved. Yeah, we hope. Let's see. Sorry, and one last element of flexibility is that for near-term targets, there's also the possibility to set supplier or customer engagement targets, which is also something that is not allowed on the long run. And lastly, before I close this presentation part, I want to make you aware of a quite significant change of the SME route regulation. So the streamlined route for small and medium-sized enterprises in itself has not really changed, but the eligibility for it has completely changed. So in case you are an SME, or you think you might be you might classify as an SME, you might have already heard of how it used to be. So how it used to be was that all companies falling under the former classification of SMEs were obliged to go through the streamlined SME route, which is a simplified route. Now, no one is obliged anymore to go through this route, and instead, businesses that qualify as an SME with this new eligibility criteria can use either the SME route or the standard route, right? So that has completely changed. The route itself, as I said, has not really changed. The price has changed a little bit from $1,000 to $1,250, both for near term and for long term. I will not go through this eligibility criteria in detail. It's good to know, especially because here we are in Europe, that these eligibility criteria have been aligned with the CSRD eligibility criteria, or not eligibility, classification of an SME, which makes a lot of sense, because back then when we were finding an SME definition, we were really seeing that there were lots of institutions in the world that defined an SME differently, right? So it's really nice that now with the CSRD, we have a bit of a consensus. So what we're trying to do, because we're always trying to make things easier, even though sometimes it doesn't look like it. And by we, I mean us NGOs and non-state actors, and hopefully also state actors, right? And align things. So this is a good thing, even though, again, looks more complicated and it is more granular but more suitable, right? Yeah, and most of it you will see in addition to the CSRD classification, you will see are basically safeguards, because also an SME can have huge emissions, or an FI can have only I don't know, for instance, a very limited number of employees, but actually have huge financed emissions through their investments. And why is that relevant? Because, just as a reminder, we'll also not go into detail here, for the streamlined route, the SBTi is not validating Scope 3 targets. So if this SME has enormous Scope 3 targets, for instance, through category 15 financed emissions of a financial institution, the SBTi wouldn't basically be able to validate that target. So this is why that's one of those safeguards, right? So what companies do here is they choose between predefined options and they commit to measure and reduce Scope 3 emissions, but they do not, they do not model a Scope 3 target and get that validated. All right. With that,
sorry, Lea.
see, there's already a question. Yeah.
Yeah, exactly. Let's take that before moving on.
So near term, I'm reading out the question. Near term SBT is mandatory before setting net zero target, while long term SBT is optional but recommended. That is correct. You cannot set a net zero target without a near term target, except you want to set a target to achieve net zero within the time frame of a near-term target, which is below 10 years. So usually, to keep it simple, we stay within these two groups. But theoretically, if you can achieve net zero in the next 10 years, then those two things can be combined and you basically have a near-term net zero target, right? Because then otherwise it wouldn't make sense to set a near-term target, I don't know, for the next 10 years, but you want to achieve net zero, then it becomes the same thing. But for most companies, I don't even know if we have that case, but theoretically it's an option. For the normal scenario, you set a near-term target, and in addition, voluntarily, you set a net zero target that in most cases has a longer time frame than 10 years, because it's challenging to especially reduce scope 3, 90% of your scope 3, right? Because the boundary jumps, the coverage jumps, target coverage, to 90% in absolute terms, right? So for most companies, this is challenging. And for a lot of companies also, yeah, that's not yet feasible in the next 5 to 10 years. But if it is, great, of course. Thanks for the question. Keep them coming. All right, let's now jump into your pre-sent questions. I structured them a little bit, so also if you maybe send several questions, don't be surprised if they are completely torn apart. And if you either are the person that asked the question and I do not answer it in a way that clarifies your point, please let me know. And also, if you see this and it's not your question and it triggers a question that's related, feel free to ask. So, first question, are non-profit limited liability companies excluded from validating targets through SBTi? Unfortunately, yes. The SBTi does not currently assess targets for cities, local governments, public sector institutions, and non-profit organizations. Of course, they are encouraged to develop science-based targets on their own, using the methods, right? Using the greenhouse gas protocol to reduce emissions. I also work at WWF. We, for instance, also do that. We could never set SBTs as a founding partner of the SBTi, but we do that anyway. We measure our own emissions and so on. But the main point here is that it's just not as suitable. The framework is made for corporations, and state-owned businesses can, for instance, set a target because they function like a business, right? In terms of their emission structure and in terms of their business models. That's really important, because what is the job of a not-profit organization? In most cases, a non-profit has a mission in society. So or an education institution. How can those organizations best contribute to achieving a 1.5-degree future? Probably very differently than just reducing their tiny emissions from a few offices, right? In most cases. Because, for instance, a university, right? They could adjust their curriculum to teach, I don't know, green business and etc., etc. So this is why. SBTs on subsidiary versus group level. There's two questions and I merged them on this slide. I want to confirm, since we are a subsidiary, will we follow the standard route? Sorry, we will follow the standard route, even though based on our size, we could qualify for the SMEs route. Yes, because that is one of the criteria. So you simply do not fall under the new eligibility criteria for the SME route. What if our parent company doesn't have SBT goals? Should our parent company have SBT goals before we set ours, or are they relevant to this at all? I mean, they're definitely relevant because they are in total, right? Have probably a lot of also operational control, and they are the bigger company, and we encourage companies to set SBTs on a group level. From an impact perspective, from a governance perspective, That being said, it is absolutely allowed for subsidiaries to set targets on their own. It is allowed for both parent company and subsidiaries to submit targets. We have all sort of examples approved. That is very normal, but each company on their own needs to fulfill the boundary criteria for the inventory, right? So 95%, sorry, that's a coverage. They need to have a complete inventory based on the greenhouse gas protocol, based on their chosen consolidation approach that you probably covered in the last session on greenhouse gas accounting, which means, of course, for the parent, the subsidiary falls into their consolidated greenhouse gas protocol, which basically means the subsidiary's emissions are double covered by SBTs, but that's fine. And just a note that this only applies to subsidiaries, not to brand licensees, country divisions. They cannot set targets separately. They need to be an independent entity. Choice of methods. So now we're really diving into methods. There has been a lot of questions on methods, so I want to go in a little bit of detail on that. Firstly, and I'm going to read out the questions first. So one was, how should the selection of methods be made? Second one, what companies can use the intensity-based targets? And then a question specifically about the IT sector. Firstly, nowadays, which is really nice in these new resources, it is very detailed. There's a very detailed overview on which sector can use which method. So you can see some, and this is just I added a screenshot, but this is a long table, right? I linked it here. It's on page 45. And that's a note that I didn't mention when I talked about the resources. Since the last resource change, the most useful guidance, like target setting guidance document, is the net zero standard, even for near-term targets. Sounds a bit paradox, but it is like this. The new net zero standard has the actual target setting guidance and is now containing what used to be the corporate manual. So you will, even if you do not want to set net zero targets, you will need the net zero standard for things like this, but also for choice of method. It's a great resource. Right. So you firstly start with this important point. Companies not covered by any SBTi sector guidance, they can use the cross-sector pathway, except they are in certain sectors and cannot join the SBTi at all, right? And then there's exceptions. There's companies that can choose, such as air transport. I mean, it's cut here now, but in theory, that will say they can use the sector-specific aviation pathway or the cross-sector absolute, which is very difficult to achieve for an airline, for instance, but it's allowed. And then, for instance, aluminum, apparel, they all have to use the cross-sector pathway because there is no sector pathway. And some can choose, some cannot, basically. This is the absolute first step that you would do. If you can choose, this is an official recommendation, you should use the tool to calculate which of the, because even for intensity targets, you can calculate the resulting absolute emissions based on your growth projections, right? The tool will give you those numbers. And of course, the SBTi, being an environmental organization, is recommending you to choose the highest absolute reductions, right? Not surprisingly. And again, in the SBTi net zero standard, there's now these guidance annexes. For instance, there's an entire annex on reporting, and there's an entire annex, all of this is new, on guidance on target setting methods. I here just added a screenshot of the table of contents, so you can see that each method has a description. For the IT sector, you need to use the cross-sector absolute. For scope 3, most companies are eligible to also set intensity targets. We will look at that in a moment. I assume this was part of your self-learning journey that you've already completed. But I anyway brought this slide. If you do have problems understanding the differences of those, maybe you can let me know in a chat, but with an eye on time, I would move forward to the questions, and then also happy to explain the difference between those methods again. All I want to say quickly here, without explaining the methods in detail, those are the methods, the only two methods for scope 1 and 2 target setting, right? Cross-sector absolute, sector-specific intensity convergence, also often called SDA, sectoral decarbonization approach, same thing. It's a convergence method. And this is only available for homogeneous sectors, often for heavy emitting sectors. And this you can only use if it's available for your sector, right? The majority of approved scope 1 and 2 targets are based on the cross-sector absolute reduction method. For scope 3, there's a lot more options than those two. Which are those? So here someone asked, what is the difference between linear intensity reduction and intensity convergence? First, I would like to quickly show you which scope 3 target setting options there are. First, the two that I just showed you, cross-sector absolute reduction, again, most common one, which is a minimum linear reduction of 2.5% per year. Then there's a sector-specific intensity convergence, but that's only if that's available for you for your scope 3 target setting method. For instance, if you have a lot of emissions in 3.1 and you purchase goods and services and you get that from one specific sector and it's covered by that method, it could also be an option to model part of your emissions based on the SDA. In general, there is so much flexibility around scope 3 target setting. You can combine methods, right? And it really depends on what categories you're covering. There's a lot of flexibility here, which is great. Then there are the supplier or customer engagement targets. And this is then the last category that we're talking a little bit more detail now on this slide and the next slides, which are scope 3 physical or economic intensity reductions. So when we're talking about intensity targets for scope 3, they can either be physical or economic. If we're talking, or sector specific. Those are three different methods. And it's really important. Usually here we really use the word scope 3 to make clear that the scope 3 intensity options, physical and economic, are only available for scope 3 target setting. So the question, intensity convergence, I'll start with this, is the concept of the sector-specific intensity convergence method. And only of this. It means we have one ideal intensity path for a homogeneous product like ton of cement, right? And we have an ideal CO2 intensity per ton of cement that is developing until 2050. And depending on where you are, company ABC, right? How climate friendly are you producing a ton of cement today? Depending on whether that's much higher or lower, you need to do more or less than maybe your competitor, because what you want to do is you converge with the sector path. And at the end, everyone needs to converge to this sector intensity. This is convergence. I'm not sure what you mean with linear intensity targets. Maybe that's a way to refer to this. So as I said, those are the only two concepts. Both physical and economic intensity reductions are calculated based on a year-on-year intensity reduction, which is a compound calculation. So every year, 7% of last year, 7% of last year. While for the absolute reduction, this is where we use the word linear, because there, the 2.5% in absolute terms really is calculated every year, which means, is calculated over the entire time span. So let's say we have a 10-year Scope 3 target here. We just calculate 10 times 2.5. And then that is our reduction, 25% reduction over the last 10 years. It's super straightforward. That is a linear calculation, plus, 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 right? And here it's year on year. So I hope that makes it a bit clearer. This is already the most complicated part. We just wanted to start with the hardest thing first. Next question related to this: how do you choose between physical and economic intensity reduction within Scope 3? So within this little category, right? So now we're only talking about this bullet. How do you choose between physical and economic intensity reduction? How do you choose the correct denominator for intensity targets? Can you use revenue growth? Here I would like to refer you to, again, the net zero standard. There is guidance on the Scope 3 methods, as I just showed you on this little screenshot of the table of contents. And what is really nice is that there you have advantages and disadvantages written down for each of those methods that enable you to choose. I put them on those slides and I'm happy to go through the most important ones, but this is an example of where I really, I made sure to answer those questions in a lot of detail on the slides, so you have the answers written and at home with the respective links. Because those advantages and disadvantages are super company specific. So let's quickly look at what this method is. I already said it's a 7% year-on-year reduction, and it's an economic emissions intensity. So you do use an economic value, and ideally it should rather be a unit of value added denominator. There are different ones. The difference between this and revenue is also including marketing costs and so on, and a lot of it can be a lot of brand value, for instance, while for the unit of value added, you make sure to more look at a specific product. It's without marketing costs, and you also subtract the actual sum of the value of its constituents. So you have a more robust indicator of emissions per profit per product in a way, right? Because, and I'm not saying that there's no way that revenue will be accepted, but you will have to make a case of why this makes sense as a climate target for you in this case. In any case, by the way, because for this kind of targets, because it is a bit tricky. Maybe that's clearer if we quickly look, for instance, at the advantage. So yes, we can normalize, we can find an indicator for a company that has a lot of different products. Nice, okay. But the price of the product needs to be quite stable also. But even if you already have, for instance, right, like for the revenue might suddenly increase significantly because you ran an amazingly successful marketing campaign, and that actually doesn't say anything about your production capacity and so on, right? So it's really difficult to refer back to the physicality of your emissions. Same table exists for physical, right? It's much more tangible in a way. And it's more suitable versus the economic, where I just said it's diverse product portfolio. Physical is more recommended for a more homogeneous product portfolio. And here there's really a list of denominators. Well, for economic based, that doesn't exist for various reasons. But here there's a lot of detailed guidance of, to give you an idea. And you see here basically there's so many options that you can use as a denominator, right? Amount of raw material, but also things like FTE, full-time employee. Yeah, so this just shows how much flexibility there is around Scope 3 to make sure that this really is useful and suitable and adjusted to your specific company case. And let's not forget the choice of method, the choice of ambition, needs to, most importantly, be able and enable you to track progress. This is what a target is for. So you need to be able to measure your reduction interventions. So depending on where you intervene in your Scope 3 to try to reduce emissions, how can you make sure that the way that you collect data every year and the way that you look at this data, you can reflect what you're doing? Because that's crucial internally and externally, of course. So all of those are related. How strictly SBTI requires downstream categories to be accounted. And this is kind of related to some of the next questions too. I would read this question, how strictly are Scope 3 inventories in general, right? Because this question might as well be asked for any other Scope 3 category. Maybe it's from the same person that then on the next slide asked, on this one, can targets be set only to upstream since downstream categories are so greatly pure estimations, right? Very related to this. So how granular does Scope 3 data need to be? Where can we draw the line, right? This is a question that is often asked because it is a question that every company needs to ask themselves or naturally ask themselves. Let's look at the hard facts first. Companies must develop a complete Scope 3 inventory based on the Greenhouse Gas Protocol Corporate Value Chain Accounting and Reporting Standard. This is the Bible. We need to follow the minimum boundary criteria of the Greenhouse Gas Protocol Scope 3 guidance, which defines, as you know, 15 categories from upstream to downstream. You need to assess every category and you need to give the numbers the best as you can for every of those 15 categories, and also show if you say that one is not relevant, basically really need to show that you have assessed it anyway to get to a robust assessment that this is not relevant. This is really important. It's part of the foundation of SBT setting that this is robust. Yes, the minimum categories or the minimum emissions that fall under the Scope 3 categories, some of them are really difficult to influence, but independently of that, they need to be in your inventory. They belong into your inventory. To address this, to account for that fact, and we'll get back to that in a little bit of detail in a moment. As said, what I said in the beginning, the SBTI is giving you more flexibility on target coverage and target ambition. But you need to first have an inventory that is complete. This is original SBTI wording, by the way, in the instance that a company faces barriers to calculating emissions for one of the category, which is very likely, the company should demonstrate its best efforts to calculate these emissions. And still, to get started, of course, you can start with a screening that is often done based on spent data, right? That is normal, but over time you should really work, all companies should really work to improve their inventories, the data quality, because again, if you only have spent data, you can basically not really track progress. You can basically, then you will suddenly, I don't know, you procure a more sustainable product, but because you only mentioned it on the money that you spent on the product, you can basically not track, this is what it's meant, track progress of this measure to change the sourcing material, the raw material. So it's crucial to improve that over time. And it's very normal. You look at the inventory first. You start with the screening. You identify hotspots. Where can you influence? Where can you get better data? And then you improve data. You start reduction interventions while you're still improving data at the same time. You transparently report on this every year. If you realize we were wrong last year, the emissions factor that we used didn't actually account for X, Y, Z, you just explain it. It's very normal, right? There's nothing to be scared of here because everyone faces the same challenges and it is really a collective learning journey. There is guidance anyway, there's a lot of guidance around the Scope 3 calculation guidance, which is a separate document by the Greenhouse Gas Protocol, is one of the most helpful resources out there. Emission factors must be representative. So if you do estimate, which most companies do, you should use at least country-specific emission factors and so on. As said, there's guidance on there in the Greenhouse Gas Protocol calculation guidance. Again, related to this question, can you give an example of how to set targets for Scope 3 when most of the data is spend-based? Again, that can be quite common. It's just important that you set targets that you can actually track. So that can be for some categories that you cover with the target, right? But in general, that doesn't keep you from setting targets. One target specifically that a lot of companies use when they only have one normal scenario which spend data would serve you to actually come quite a long way is if you have a lot of emissions in your purchased goods and services. So for instance, a retailer, right, has a lot of emissions in their supply chain, and there you can set a supply engagement target. And for instance, 80% of my suppliers will have science-based targets by 2025. There's specific rules for supply engagement targets. But here it's fine because with spend data, you can still identify the most impactful suppliers. And most likely the ones that you spend most money on are also the ones that cause you the highest emissions. You usually do this 80-20, right? Usually like 20 or often 10 or 20% of your suppliers are responsible for 80% of your spend or your emissions. And then those would be the ones you tackle. And the other ones are the ones that you leave out because, and that brings me to the next one, you can leave out emissions, entire categories or parts of categories from your target because the inventory boundary is not the same as the target coverage. The boundary is the boundary of your inventory. As said, you need a full inventory and you cannot leave out more than 10% of your total Scope 3 emissions. When Scope 3 emissions make up 40%, you need to set a Scope 3 target, and that needs to cover 67% of your total Scope 3. Which brings us to all those questions that asked, all right, if we need to cover 67% of our Scope 3, how do we choose what goes in and out, right? How do you calculate the boundary coverage? For example, the 67 coverage for Scope 1 and 2 near-term targets, careful. 67% coverage for Scope 1 and 2 near-term targets does not exist. It's a 95% coverage for Scope 1 and 2, 67% only for Scope 3. How do you determine which categories should be included in Scope 3 targets? Very common question. Can you choose to set targets only for the material category of Scope 3? Yes. Do these picked categories make up the whole absolute? I mean, yes, as long as they cover 67%. Do these picked categories make up the whole absolute target? Yes, as long as they cover 67%. In that way, can we leave out categories where we have no influence? Yes, as long as they cover less than 33%, right? So this is what you need to show. How do you choose? Depends on you. You can freely identify, except for oil and gas and fossil fuel related emissions. Super exception. Nothing what I'm saying here applies to that. But everything else, sorry, it's not completely true. There's some other sector specific for flag. In general, though, you can quite freely choose which categories to include and exclude. So indeed, coming back to the downstream category question earlier, if downstream is transport, for instance, is insignificant for you, and you can't influence it, absolutely fine to leave that out, right? You need to calculate it. Yes, you do not need to cover it with a target. Here, the SBTI gives you a bit of guidance what is likely to be relevant. But to be honest, if you're going through this exercise of building the inventory in a way, and again, please look at the submission form, in a way that's meeting the submission form, you will learn a lot if you haven't already done that, right? You will automatically find out what are the hotspot categories that might be, for a lot of companies, that is a quite surprising, they're surprising learnings. But once you have those learnings, you basically know where to start, right? Same questions. I just added this. I just added this as a reminder again, because I thought it's useful. And I added the sector exceptions to the rule I just said here linked. All right, we're getting to the last questions. Yeah.
Yeah. Sorry, just to interrupt for a second. I wanted to remind everyone that we do have time for Q&A very soon. So you can start thinking those questions that you would still like to ask and post them in the chat. We are taking a few more minutes to go over your pre-submitted questions, and then we will move on to open Q&A. So just so you know. But go ahead, Leah.
That's a very good point. Yeah, we're almost done with the present question. I hope I didn't run through them too much. And again, please let me also know if you sent one of those and you didn't understand the answer or you have a follow-up question. I'm happy to go back to the slides in this case. All right. Now we're leaving the wonderful world of Scope 3 for a minute and jumping more into a bit more company-specific, sector-specific questions. We are a manufacturing company with 4 quite different divisions. We see potential growth in 2 of these and status quo in the 2 others. It is very difficult to calculate emissions separately for these 4 divisions. For example, transportation and materials, capital goods, etc. Should we set intensity targets for 2 divisions and absolute targets for the other, or set intensity targets for all 4 together, or absolute targets for all 4? This question can be answered very differently if we're talking about scope 1 and 2 or scope 3. I kind of get the feeling it might mainly be about scope 1 and 2. In this case, it's quite easy to answer. So I'll start with that. Again, coming back to one of the first questions, right? How do I choose between methods? Firstly, you look at all your 4 different divisions. First question is, are any of your business divisions obliged to use a sector approach for scope 1 and 2? And if no, if yes, you don't have a choice. This division needs to be covered with the sector-specific method. You can combine methods, both for scope 1 and 2, as well as for scope 3. In some cases, there's no other way. So for instance, if one of those 4 business divisions produces energy, you need to use the power sector method for this portion. And then the 3 other portions, you might be obliged to use the absolute method because there is no different one. In this case, let's assume this, right? You have 3 absolute, 1 sector specific. You can either communicate it, like you need to submit them like this anyway, but submitting a list of targets does not mean that they are like going into the public like this. This might also be new to some of you. You can submit more targets to be validated than what is actually shown in the target wording. Because then you might choose we don't want to actually, and there's pros and cons for all sides, but you could say we don't actually want to separate the power division in public, because I don't know, maybe you don't, it's not, that could be communication, marketing reasons, could be all sorts of reasons, but you can choose to calculate what are the absolute reductions that result from this power sector pathway, and then calculate the weighted average of those 4 divisions, and then come up with an overall absolute reduction and put that in your target wording. But underneath, you have the sector method for one of the divisions, right? Long story short, you need to, for each sector, you need to follow the rules. If there are no sector methods available, easy, you have to set an absolute target anyway, in which case you set an absolute target across all the business divisions. And in this case, it can also be really nice for you, because you can even out the potential growth of one with the higher reduction of the other. In this case, it's fine if you have one sector, one absolute reduction across all business divisions. You just count it as one, right? You need to show that this one entity, the group, reduces the overall emissions of, I don't know, 42% over 10 years for scope 1 and 2. And where you do that within your divisions is up to you. Again, some sector specific safeguards, but that's the general way. And same for scope 3, only that for scope 3 it's much more common that companies choose to also put that in their target wording. I put an example. Company C commits to reduce absolute scope 3 purchase goods and services. So they really mention the category 3.1, 50%. Company C further commits to reduce scope 3 business travel and employee commuting 55% per employee within the same time frame. So what did we learn? What we looked at earlier, this first one is the scope 3 absolute reduction. The second one is the physical intensity reduction, right? 7% year on year. And it shows us that those 2 categories together cover 67% for this company or more. And all the other categories, they just left out because it was enough for them to look at those 2. And that applies for everyone. And those are the last 2 questions. This one is fast. There's one flag, like forest, land, and agriculture related target of a restaurant operator that asks 70% of our emissions come from afforestation land use change emission, but as an organization, we don't directly belong to that sector because you manufacture fruit products, so we source raw materials. So for me, in either way, so those are the 2 categories that are obliged to set forest, land, and agriculture targets in addition to your non-flag targets, right? It's always to be set in addition. And it sounds like you are manufacturing food products, right? So you are in food production or processing, one of the 2. So you're actually in one of the typical flag sectors. And even if you weren't, if 20% of your emissions come from flag, which in your case it clearly do, you need to set flag targets. So long story short, you do need to comply with the forest, land, and agriculture guidance. Last question of Finland's gas transmission network. It's a tricky case. And the question is, we are not directly involved in the exploration, extraction, mining, or production of oil, natural gas, coal, or other fossil fuels, but more than 50% of your revenue is the transmission of fossil fuels. Does this prevent us from setting your SBTi targets? Unfortunately, yes. This is really the prime example of this safeguard that the SBTi has introduced here. And this is one example where the SBTi for once deviates from the greenhouse gas protocol, because it's very likely that your company does not own the gas, right? There's a customer on one side, you run, for instance, a pipe, right? And then there's and then there's the producer and the customer on both sides, and you only run the transmission. So theoretically, you would think you would only account for the losses. But the SBTI, in the absence of the oil and gas sector method, because it is such a crucial sector, and there is some quite sometimes even philosophical questions, right, about the role of gas as a transition technology, etc., etc. These questions need to be answered on an institutional level. So in the meantime, there's a fossil fuel policy. This fossil fuel policy is linked on this slide as well, which say that if you sell, transmit, or distribute those emissions, if 50% of your revenue, as you say, come from this, you're not allowed to join at all. But if you did have less than 50%, you could set targets. But even then, and this is also why, like, it's very unlikely that company would do that. That's why I'm saying it's a safeguard criteria. They would have to cover the use of sold product, even though they do not sell the product, for this gas with a 1.5 degree aligned target. So reduce it by 4.2% per year. So that is super, super ambitious safeguard. So unfortunately, right now, you cannot commit to the initiative or set targets. And with that, we're done with the pre-sent question, a little bit later than planned, but I think we haven't received that many questions yet anyway. So again, the invitation. I think now you can also raise your hand. It would be lovely to hear from you. And otherwise, I just start answering the first question. The question is, our company is an SME using renewable electricity and district heating. We're also using geothermal heating in some of our buildings. Additionally, we use renewable fuels to cover about 80% of our scope 1 fuel emissions. Scope 3 emissions are over 90%. What kind of near and long-term targets would you recommend in our case? If you go through the SME route, you cannot choose the method. You choose just between different time frames. So you have to commit to a 4.2% reduction of scope 1 and 2 targets, and to commit and reduce, measure and reduce, sorry, that's the wording. Commit to measure and reduce scope 3 emissions. So this is, and please check in detail the eligibility criteria if you would be eligible. And then if you, for instance, say, yes, 90% of our emissions are in scope 3, and this is also what we want to influence, you might not want to go through the SME route, even though you might be eligible, because this is actually where, and this is also why this is a good change, right? And I can only tell you that the SBTI received a lot of constructive feedback, let's say, to start allowing SMEs to go through the normal route, which they now have, because companies want to set scope 3 targets in many cases, because this is where they have the actual lever. And what's the point setting ambitious climate targets if you then leave out what you actually can contribute to mitigating climate change, right? So I don't know if the question is what kind of SME target or what kind of route. That is lastly up to you. I think I would, if you have the resources and the capacity, and then I would always recommend to go through the standard route, because it gives you a lot more flexibility, but also communication benefits. It's just a more robust framework, right? But I do really like the SME streamlined route for a specific type of company, right? Might be really small in the beginning of the process, you know. And yeah, it really depends. So sorry, I cannot give you a more more black and white answer here. The different divisions are not in sector specific areas. So that is the Sophia, yeah, from the company with the business divisions. Questions. A question. Just go back. But yeah, then it's what I just said, right? Then it's the case that you have to set the gross sector absolute reduction, and you would just set one. You would just set one target for scope 1 and 2, absolute reduction. Maybe for scope 2, you want to set a renewable electricity targets. We didn't talk about this at all now. Maybe actually if we do not receive more questions, because there was related question, which was kind of a follow-up question to the greenhouse gas session you had. But actually, we always say that the SBTI is basing everything on the greenhouse gas protocol. But then, I mean, it's often, let's say, then refining it or packaging it into sector-specific requirements. Anyway, for scope 1 and 2, it's very likely that you would set either absolute reduction targets for scope 1 and 2, or maybe just for scope 1 and then for scope 2 a renewable electricity target, basically same as if you didn't have different business divisions. And then for scope 3, it really depends how the business divisions are managed. You need to set up a structure that makes sense to manage data, to manage interventions, and it should work over time. And this is just maybe something, recommendation for everyone, especially if you're still in the beginning of the process. This is also a huge chance to set up structures, even though it's difficult in the beginning and it takes a lot of resources, but to use this process to really kick off, like design and start kicking off long-term processes, like long-term structures of data collection, of collaboration, that will work, right? And maybe, you know, in the beginning, there's not that much resource allocated or not that much buy-in. But then hopefully, you know, it gives you the structure to strive towards like really filling in these structures where needed and filling our gaps over the years to come. So if you, for instance, have sustainability departments in the different business divisions, they all want their own targets, definitely. They kind of need their own targets because that's also how management works and how humans work, right? They need their own responsibility. They need the area of responsibility and they need to measure their success. So one part is what you get validated by the SBTI, and the other part is how do you translate the validated targets into internal targets or portions of targets that make the decarbonization process manageable. So you might have business division specific sub-targets, right? And you need one steering committee internally, which is something we always recommend, right? Across the divisions then, that manages this process together with one person that has oversight. So there's different governance options, but it's doable. We have a lot of diversified companies approved. I hope this helps.
Thank you, Leah. I can't see any hands up, and there are no new questions in the chat. Now would be the last opportunity to ask questions from our expert. So we can just wait 10 seconds more if someone wants to indicate that they have a question or a comment, or maybe just want to participate in the discussion. That is very welcomed.
Or maybe that just means it was really clear, everything,
Maybe.
overwhelming. Let's see. You get a chance now to discuss this in the breakout rooms, right? To digest the content. You receive the slides. I really hope it was useful. Thanks for sending all these great questions. And yeah, I wish you a very interactive and successful rest of your session. And I might see some of you again in the tool sessions.
Yes, thank you so much, Leah. And Albert will explain about the practical exercise and the tool demo at the end of today's session. So you will hear more about that. But there are no new questions. Thank you so much. Well, right now we got one more question. Let's take that and then we wrap things up. Can you see it,
Sure.
Leah, or should I
Yes,
read it?
I see it. Setting a target concerning supplier, is it added to other scope 3 target? Is it well seen? Yes. So that's called a supplier engagement target. And what it means is that instead of setting your own target to reduce supply chain emissions, you encourage, request, whatever, your suppliers to set their own science-based target within 5 years. A lot of companies do that anyway without getting a supply engagement target, because in order to reach their scope 3 category 1 emissions, they need to engage their suppliers. For instance, if you're a retailer, you cannot achieve any scope 3 targets without working with your suppliers. But yes, if you set a supply engagement target, it's counting towards your scope 3 targets in the sense that, yes, it is counting towards your 67% coverage. And there might even, I know that there are companies, retailers specifically, where, they have 99 of their emissions in category 3.1, which means in their purchased goods and services. In this case, just targeting their most important suppliers, which might be 200 out of 8,000, sometimes it's really surprising, like how powerful it is to focus on the most impactful suppliers. That might actually already cover the 67% coverage criteria, the minimum coverage of scope 3, which means this is the only target that you can set, for instance. So just telling you, yes, you can. And another option, which we see a lot, is 1/3, for instance, covered with a supply chain target, 1/3 covered with an absolute target, and the third being excluded, because you can exclude up to 33%, which is then just including all the categories that are either relatively small or very hard to influence right now. All right, well, thank you. And with this last question, I'll leave you to it. Wish you a wonderful day and hope to see some of you again soon.
Thank you so much, Leah. Have a nice day.
Thank you, everyone. Bye-bye.
The rest of us are taking a 10-minute break. So let's meet back here at then 10:32 CET or 11:32 here in Finland. So see you soon.
All right, a warm welcome back, everyone. I hope you had a nice little break and feel recharged before this second and last section of today's session. Just double checking so you can see my screen, the slides.
Yes.
Perfect. So we will now move into breakout rooms. Today we'll give you some time to discuss a few questions. But just before we move out to the breakout rooms, a quick reminder of these recommendations. And again, you're not supposed to produce anything. This is, again, a time for you to discuss with your peers. But it would be good to still assign a group lead whose job is to inquire equal speaking time, so you all have the opportunity to speak and share your thoughts. And also a timekeeper, and I will shortly let you know sort of the time allocated to this. We have suggested a couple of discussion questions, but you can cover these or use the time for your benefit. So if you have anything else you want to discuss, feel free to do so. This is your time and space. And again, good to introduce yourselves before you get started. We will divide you into these rooms shortly, and we will also post these to discussion questions in the chat as well. And again, you will have the opportunity to discuss anything else you would like. So we thought to give you around 25 minutes. So we will get you back from the breakout rooms at 11 CET or 12 EET. And yeah, we will be here also in the main meeting room. So if you have questions or anything, you can go back to us here. We will also go through the different rooms and listen in and see if you're progressing well. And with that, I'll leave over to Netta, who will divide you into the meeting rooms, and see you later. Welcome back, everyone. I'll just share my screen shortly. Apologies. And there you go. Again, welcome back. I believe you had interesting perspectives and engaging discussions in all groups. We jumped through all of them. So thanks for that. And I think you discussed both the suggested questions and your own, so that's good. We'll now look at what's ahead or what's next in the program. And we have quite a few things. Our next workshop is about setting net zero target, and that will be on the 9th of October, so in about 2 weeks. And that will be optional for this track, but we encourage you to join, of course, if you find it useful, and I think it will be for sure. You also have an important deadline already next week, and that's to please send us your questions for your net zero questions by October 1st, end of day. We also want to let you know that between the 10th and 22nd of October, we will organize sector-specific Q&A sessions, including for the financial, buildings and forest land and agriculture sectors. And we will share more information via email. I'll also have a different slide about it as well with some more details. But you have to register for this. So we'll share some more information about that soon. And on October 24th, which is also the UN Day, there will be a SBTI practical exercise. And for that, remember that you have to enroll for it on Academy, and there will be multiple options, sort of multiple sessions to do so. So please have a look there. And again, we'll share some more information in our follow-up email as well. And also shortly that we will provide or share the answers, the Q&A sheet shortly on your near-term SBTs questions, just FYI after this session. And then as always, we will also share a feedback survey. Please help us to improve anything or share your feedback. That's always valuable for us when sort of further developing these sessions. So that's most welcome. So thanks beforehand for helping us with that. All right, more specifically on the SBTI sector exchanges, just some more details on sort of timings, etc., and what sectors are covered. Just remember that these will be more advanced, but you are most welcome to join if you think it's relevant for your company, if you are operating in any of these sectors, of course. And again, we'll share some more information on how to register and about these sessions in our follow-up email. Also a little reminder, Leah also brought this up, but there are quite a lot of useful resources on the SBTI website. So, I mean, they are all available, and yeah, please make use of them. And I think Leah again provided some suggestions on useful documents to look at. All right. Before we wrap things up, do we have any pressing questions before we end? Anything sort of related to the program or anything? I'll give a few seconds. Just speak your mind. You don't have to raise your hand or anything. Otherwise,
there is a question in the chat about the presentation. So we are sharing the presentation as usual, hopefully tomorrow already.
Yeah.
Then there is a question from Peter. Unfortunately, I don't think I can answer that. Very specific question. But we'll take a note of that and see if we could get that answered in the net zero session, for example. And just to add to what Albert said, the net zero session, you are very welcome to join, but I want you to know that the level of discussion will be a bit more advanced. So since you are in the foundations track, you might not be as a company, you might not be at the level where the other participants are, because this is the advanced track will be also participating in the net zero session, and it is tailored for them. So that is just good for you to know before joining, but you are welcome to join.
Yeah, thanks, Carol. All right, that's it for today. So thanks a lot for participating and for engaging in these discussions, and see you in a couple of weeks.
Thanks, everyone.
Thank you.
Thank you. Bye.
Thank you. Bye-bye.
Thank you.
Thank you. Bye.